YouTube Premium.
Okay. I can consider this. There. I thought this was better than the other option. Welcome to part 2. I just wake up like 10 minutes ago. I had a drink, water, and just let's just stream right now. So, okay. Let's continue on part 2. But last time, like literally like 6 hours ago, I learned about long-term asset, intangible asset. More specifically, it's like intangible asset, like research and development. What else I learned? About like the different in reporting under IFRS and US GAAP for intangible asset. I saw a little bit about goodwill, but mainly about research and development, about how do you calculate intangible impairment. Impairment also about the purchase intangible and purchase obtained in business acquisition, R&D, software development, for internal use or for sales. Okay. So yeah. Okay. Now let's do the next stuff about financial statement. Now 4B, which is topic in long-term liabilities and equities. Yeah, just start now. I'm not gonna look at anything except my PowerPoint until this timer is done. So we learn about lease. We learn about lesser direct financial lease, defined benefit plan, share-based compensation, pension benefit. Now, first thing was I was to check that guy, company stuff. There's a video about lease, but that's actually really good. That's fucking. Oh, he does have account expenses. I think he has any video about it. Okay. I think because it's like too specific, so like he doesn't have a video. So I'm just gonna read. Okay. Lease. Lease is a contractual arrangement whereby the lessor lease that there's like two contract. There is two people. There is the lessor, and lessor is the owner of the asset. I'm guessing they allow the lease to use asset for a specific period of time in return for periodic payment. So for example, like company A lease their product or their asset to company B, company A to company B, and company B uses it for like 2 years, And in that 2 years, for example, sometimes it's like quarterly, the company B has to pay company A like specific number of payments, for example, like for each quarter for like 2 years. So right. To be a lease, a contract must meet the following three requirements. It must refer to specific asset. It must give the lease effectively all the asset economic benefits during the term of the lease. It must give the lease the right to determine how to use the asset during the term of lease. Okay. Advantage of leasing: less initial cash outflow. Typically, a lease requires only a small down payment, if any. Less costly financing, because a lease is effectively secured by this lease asset. If the lease default, the interest rate implicit in lease contract may be less than the interest rate would be in a loan purchase asset. Less risk of obsolescence. At the end of the lease often returns the lease asset to the lessor, therefore does not bear the risk of an unexpected decline in the asset and of the lease value. Given that the lessor bear the risk of obsolescence, this increase in the lessor risk and is reflected in a higher implicit interest rate with the lease. Under IFRS and US GAAP, any lease in which both the benefit and the risk of owner are substantially transferred to the lessee is classified as financial lease. The risk of ownership are substantially transferred to the lease is classified. So finance is okay. So there's something called finance lease, which basically the risk of ownership are transferred to the one that lease. Lessee. I'm saying lessee. And okay, lease is classified as an operating lease. Financial reporting standard require lease to be classified as a finance lease if it meets any of the following 5 conditions. Ownership of the lease asset transferred to the lease. Ownership. What's the difference between the first one? But like I said that it must give the lessee the right to effectively all the economic benefit, how to use asset. Ownership. Okay, I'm guessing ownership is different than those stuff. The lease, the lessee has an option to buy the asset and is expected to exercise it, or if it meets any of them. Okay, but this one is like has to meet all the following criteria. Okay. The lease is for most of the asset useful life. Okay. The present value of the lease payment is greater than or equal to the asset fair value. The present value of the lease payment the lessor has no other use for the asset. The assets like of special nature are suitable for use by lease. Lessor point of view. Treatment of financial lease. Treat as if lease asset were purchased with debt. What is I'm guessing a lease affect the asset and the liability, right? It's definitely not. like misalnya 2 juta over like 2 years company A company B, ya kan? I'm guessing the liability goes up by 2 million and asset goes up to 2 million, but I think like a different line as well. The user, okay, this is the lease, the user. For the company renting the equipment, the lease effectively inflate both sides of the balance sheet. At inception, the lease records a right of use asset and corresponding lease liability. Both are recorded at present value of the future lease payment. Financial lease. Oh, what the fuck? Is amortized? Treatment of financial lease. Treat as if lease assets were purchased with debt. Present value of future. Okay, financial lease. Yeah, okay. Present value of future lease payment is reported as a balance sheet asset and liability. Asset is amortized over time. Interest expense and liability recognized. Interest expense. That was what I was thinking. So inception record rate of asset. Wait, can you give me? Yeah. Okay. It also affect the cash flow statement because interest portion. I don't get it. Okay, let's just scenario example different size. So we have an annual payment of 12,000 The lease term is 3 years and it is discounted at 8%. We calculate the present value as around 30 mil, around 30k. On day one, your return on right of use, return on right of use asset is 30.5, okay. And your lease liability is, lease liability is 30. Year one, the income statement impact. So amortized expense, that I was thinking to 3 years. Okay, so it's together, yeah. Interest expense, okay, 2.74. Okay, total expenses. So there is amortized expense as an interest expenses, beginning liability times the rate. Total year, so it goes, okay. Balance sheet update, new right of use asset, 20. I'm guessing because it's already been paid in this year, right? New lease liability, principal paid because total payment minus interest. Okay, amortize expand. Oh, like we paid the interest expense first, then and then like the rest of that is gonna be the interest. It's gonna be the interest expenses. So yeah, total income statement expenses. Yeah, because the amortize. Why the fuck is it more? What? Okay, it's gonna be on the balance. It's gonna be on the liability and the balance sheet, right? Okay. Total expenses. Oh yeah, it does the same. Yeah, expenses the same. So 12,000 total expenses. Income expenses. Okay, so it's 10. Okay. What's the 10,308? 10,308. I'm guessing it's gonna be splitting. Yeah, it's splitting that into three. The amortized expense is gonna split into three, and the expense, interest expense. Okay. Okay, I understand. I understand the income statement. Next is the balance sheet. The balance sheet. This is where you see the gap that confuses you. The right of use asset is reduced by a flat amortized amount. The lease liability is reduced by the only principal paid. Yeah, that makes sense when inception, but in the year one, it's gonna be not effect on equity. Okay, wait, lease liability. Where's 2474 dari interest expenses? Okay. I see now. Beginning liability. I'm guessing 925 minus 9526 9526 dari principal paid. And I'm guessing because ini gonna be 1712. Wait. Delapan 96. But it could have been 8,000. No. Wait. Minus, huh? I'm still gonna study. Yeah, yeah, it makes sense now. Yeah. Okay, I get it now why it's like, by the way. 1038, 1038, 1038, sorry, 0 in the list here. And for the lease and liability, it's this. Where is the lease liability? 95 26, so it's the payment minus interest. I don't know why the fuck is it not being. Okay, last question. What is butane? I mean, retained earning represent the cumulative amount of company net income that has been kept by the business rather than being paid out to shareholders as dividends. In the accounting equation, the earnings is under shareholder equity. Income statement and shit. I want to ask one more question, but let's take a break. Ya, palingan nggak suka apa namanya retain earning. Oke. Yang pasti lebih cepat sih pace nya daripada yang tadi pagi. Tadi pagi 25 menit satu slide doang anjing. Betul. I don't like this. This one is so good. Shout out to Hololive. Jasmine is really good. Oh shit, I'm lagging. Okay. Am I back? Am I back? Halo? Am I back? Oh, oke, udah balik harusnya. Indie home. Wow. It's a really good song. Oh, why is it stop? Okay. Harus. Oh, this is the balance sheet, right? Oh yeah. Yeah. Oh, langsung aja. Alamat. Langsung aja. Ada. Terang banget. That's fine. So the present value is of this fair. Okay, no, the fair market value of this financial leasing is $27,000. But nggak bisa kayak gitu karena we have to amortize it. No, that's not how you amortize it. To amortize it, it's biayanya kan 10.000, ya kan? Nah terus kita bagi untuk mana 7. Yes, the payment, not the fair market value. Salah balik. And 10.000. Nah hasilnya harusnya 26.243 dolar. And so yeah, from asset present value lease payment, liability present value lease payment. Okay. Number here, to make sure this partial lease example. So this is the beginning value of 26.23. Okay. So interest expense is 262, which is this value here, and I'm just gonna and then dikali what's that? Yeah. 107. You sure? Yeah, 20 salah. It's not 1837. Okay, it's the same as in the PowerPoint. That makes sense. Payment 10.000 tetap year and lease value. And lease value-nya book value. Where's book value? What? The book value of the asset. Ya ini gue ngerti, tapi year and lease value sama book value asset tadi. Oke. I should understand this is where this is from. I'm guessing it's this. I'm just gonna use this. Okay. 26 sama ini kan? Shit. Yes. Okay. I can't see, bro. Oke, ya dikurang 10.000. 1808. Oke, I'm correct on the year end lease value, but gue tanya. Oke, fuck, I have some question that I like to question. So, where in slide 5, what where mungkin ini kali ya. Ini ganti ke the present value and not the, let's say 18.837. I'm wrong. Okay, maybe guess as well. Ini juga dihilangin. I'm just guessing here. I don't know. 1889. Okay. So the initial calculation to find 262043, I already understand that how to book value changes. Once the asset is recorded 26243 plus 6k, it doesn't stay at the value. It is amortized over the life of the lease. Similar how you would depreciate a piece of equipment you bought cash. On slide 6, the book value assets column shows slide 6, fuck, okay. Shows the value after each year amortized subtracted. So, okay, 268,743. Which is this. Mana ya? 26 17 9. Okay. Okay. I want to ask, what should refer to lease liability? This is the amount of money you still owe the lessor. The book value. The book value refers to the right of use asset. Oh, okay. This represents the right use of the equipment during this lease term. So, the book value is going to be put on the asset. Yeah, and then year end. No. Year end lease is going to be. Lease liability, what you owe, that lease value. So we still owe 18k in okay. Yeah, lease value. The client's value is like, it's kind of like an exponential growth, like what growth would decline. Generally, have a book value generally lower than the lease value. Okay, yeah, declines linearly. That's the key part, book value. One more question. So that means lease value is added to the liability. Wait, give me a second. There should be an example. Ya, dikurang di retain earning dari itu. Dari apa namanya? Dari liability lebih besar on general daripada book value, tapi dikurangin di retain earning, jadi aset sama dengan liabilitas equity. Terang banget So there is amortization and principal. It's more correct. Amortize and principal payment. Okay, let's look at the next slide, which is slide 7. Financial lease point of view. Financial lease example, continue. So this is going to be on the cash flow statement. 18,837, I'm guessing dari interest expenses. Okay. Dimasukin as interest, and JFF is cash flow from financing. So the principal 10.000 karena gue bayar 10.000 per year, and then dikurang sama interestnya. Operating lease is CFO, annual lease expenses 10,000. For an operating lease that is not short term, under US GAAP, under US GAAP, lease liability is also recorded and for an operating lease that is not short term, under US GAAP, lease liability, and that is the year-end lease value, is also recorded and amortized as under IFRS. Oh wait, this is IFRS example. Okay. However, right of use asset is not amortized straight line. Instead, it is amortized by the same amount each period as the decrease in the lease liability, so that the asset and the liability are equal each. Okay, so I'm guessing in so that the asset and the liability are equal in each period of the lease on the income statement. So it isn't added to the retained earning. Interest expense and amortization of the right of use asset are not reported separately as they are for financial lease. Okay. On the income statement, interest expenses and amortization of the on right of use that are not reported separately. Wait, what? I'm guessing it's this one. Is because in this example, the year-end lease and the book value is calculated separately. Amortization and principal. This one is amortization, this is principal. On the income statement, interest expense and amortization of the right of use asset are not reported separately as they are for financing lease. Finance lease. They are combined and reported as lease expenses. On the cash flow statement, the full lease payment is classified as an operating cash outflow. Also, okay, it's on the CFO, cash from operating. Yeah, this is for operating lease. This is not short term. Wait. Under US GAAP, lease liability is also recorded and amortized under IFRS. Wait. For operating lease, this is not short. Under US GAAP, lease liability is also recorded and this is the same fucking sentence. Okay. This is the example. On the balance sheet, the book value of right of use asset is amortized by the same amount each period. Dan ini pakai yang year end lease kalau ya. So I'm guessing US GAAP pakai year end lease, tapi yang IFRS pakai book value juga. On the balance sheet, the book value of the right of use asset is amortized by the same amount each period as the lease liability. Okay. Is equal to the principal payment. Okay. On the income statement, the lease expense will equal interest plus amortized the right of use asset, which will equal the lease payment. Amortized is equal to the principal repayment each period, and the principal repayment equal lease payment minus interest. On the cash flow statement, the entire 10,000 cash outflow is classified as cash operation. Lease expenses. So this is the income statement, the year one interest, amortization, and total is going to be 30K. I don't know. Okay. Lease expenses 10K. Financial lease expense equals interest plus amortization. Earliest higher expenses because lower net income with financial lease. Later year, lower expenses, higher net income with financial lease. Cash from operation is higher. Cash from financial lower for financial lease. What the fuck does it mean? Financial yang dimasuk ke cash flow interest kan? Ya, interestnya dikurangin, cash flow-nya. Why do cash flow operation get higher? Kenapa cash flow operation get higher? Cash flow operation. Okay. Last one, financial operating asset equals lower. Wait, I still don't get it. What's the difference? And this must be the lease point of view, so it's quite complicated. It should be more easier for the lesser. Earning before interest. Financial lease treats you like an owner with a loan, while operating lease try to keep things. So with two separate line, this is financial interest and amortization. Lease expenses front load higher in early years. The expense is exactly the same every year, usually equal to the. Earning interest is none. Depends on the year, right? Some years is gonna be higher, some years is gonna be lower. The system. But I'm guessing earning before interest and taxes is gonna be higher in the first day. No, in the first year than the operating lease. Yeah. The balance sheet. This is where asset and liability gap comes in at the very start. Both lease looks the same. Record asset and liability of the payment. What happens next is the matters. Financial lease, the gap grow. The asset you amortize straight line. The liability you reduce it like a loan. Yeah. Under US GAAP, operating lease mirror method must be equal to lease liability. Yeah. Okay. The standard twist IFRS and US GAAP. As an analyst, we must check which rule book the company is using because it changed everything for the operating lease. IFRS, there is no such thing as operating lease for lease. Okay. Under US GAAP, there's two things. There is operating and there is. You should. Okay. Okay. Now let's look at the asset. This is, I'm guessing, under USG. No, it is not under USG. Okay. So asset is lower. In finance versus operating, the asset is lower than the operating asset because of the interest. The interest is higher, right, than the operating. This is the operating. Is it true in operating lease? The interest stays the same. For the whole period. Okay. I get it now. Okay. It's this example. Okay. Liability is the same. Earning at the early years is going to be lower because of the interest, right? Because net income is the lower. This is the revenue. This is somewhere the interest, right? So of course, it's going to be lower. But it's going to be higher in the early because the interest also the interest kind of get lower. I'm pretty sure. Yeah, because the interest gets lower. No, because of the. Okay, I think it's because amortized because it is not linear. So I make that sound good. Okay, earning before interest, it's gonna be higher because the interest is quite high, and interest expenses is higher. Yeah. And operating cash flow is higher. What is the operating cash flow is higher because of the interest same. And cash from financing, yeah, same. Okay. So in earlier there's higher expenses. Wait, expenses is not interest, huh? One more time. Slide 10 mention that in the early years net income individually stated. Is it correct? You have identified the exact pain point. The lease accounting. The reason why the lease has a higher expenses in the early years is specifically due to interest expenses being as its peak when debt is largest. But you're correct that the way amortization is calculated differ from the two. It is interest component that push the total cost. What eventually is heavier early on. Yeah, because amortization is done by just divide the number. But interest is more realistic as calculated beginning debt times the rate. Because your debt is higher on day one, the interest expense is also higher, and yeah. How the operating lease stays flat under USGAAP. An operating lease is designed to show a straight line. Expenses usually equal to lease payment. To make this happen, accountant force. Okay. Before the funds, I understand this. I don't need to. Since net income, kalau return earning, it's gonna be lower because since net income is lower, return earning and total equity will also be lower. Yeah. And the earlier and the function again. Okay, lease point of view. Oke, kita stop dulu berarti. Ini slide 11 dari 28. Bisa sometimes. Belum juga Q&A. Namanya. OBS Studio is not working. Wait. There you go. It exists. What does a 620 come from? Oh bright. Terang banget. Okay, let's go next. Itu sama guessing, interest sama semua di bracket quarter. Bisa kalau tiga bulan berarti kayak 3 bulan lah, 1 quarter. Bisa kayak 3 quarter, berarti tiap quarternya interest sama. The answer is actually even simpler. There is no interest expense recorded at all. When the slide mentioned that expense is a straight line, it means that the total cash you pay for the lease is divided equally across months. Now come back to the interest computation component. Okay. You do not record lease liability or right of use asset, no debt, no interest. Since there is no liability on the book, there is no loan to calculate the interest. Lesser point of view, lesser financial operating lease, lesser report lease asset on the balance sheet, recognize depreciation expense on the asset. There's operating, this is only on this USGAAP, recognize the lease payment is as an income. Itu kan IFRS kan both itu as financial lease, right? Operating lease also under USGAAP. Lesser report lease asset on the balance sheet, recognize depreciation expense on asset. Depreciation expense on asset, okay? Jadi karena operating kan, kalau operating itu yang lease yang ngebiayain depreciation or the rest, right? Recognize lease payment as an income, okay? As with the financial lease, the entire cash flow is classified as cash from. Oh, really? As with the financial lease, financial lesser remove the lease asset from its balance sheet and add lease receivable asset equal to the value of the expected lease payment. Recognize lease payment as a part of interest income and part of the capital thickness interest. So a lesser point of view, from lesser sales types lease. Direct financial lease, manufacturer or dealer of lease equipment. Present value of lease payment is bigger than carrying value. Inception, record gross profit. Record lease as a people take out asset on. I need, okay. I'm just gonna read the example. I feel like it's better. Okay. lesser point of view. From the previous lease example, the lease has actually annual payment of 10,000 over 3-year period. At the end of the lease, which also at the end of the machine useful life, this is financial lease. Lease will return the machine to the lessor. The interest rate implicit in the lease is 5%. The lessor believes that asset will have a residual value of 2,000 at the end of the lease period. The carrying value of the asset recorded as the inventory in the lessor balance sheet. Because the carrying value of the asset is 13. Calculate the impact of the lease on lessor. Financial statement of the each 4 year if the lease is treated as financial lease. So the present value is the same. We calculate 26k. This is treated as revenue at the beginning of the year. The present value of the expected residual value. The lessor believe the asset will have a residual value. I'm guessing this is the residual value, right? So from 10k to 2k. So yeah, the cost of the sales is equal to the asset carrying value less than present value of the residual value. Yeah. Okay, so direct financing. Rowell Inc. lease a machine to Hull Company. The lease qualify as a financial lease. As a finance lease. The term of the lease of 3 years at 10,000. Rowell estimated the machine can be sold 3 years for 5k. The asset cost is 24. What do you mean? What's the asset cost? This is financial lease. The fuck? So okay, this is the direct financial. Okay, back lease receivable. Lease receivable, asset price, value, annual lease payment. Okay, this is gonna be on income, right? I'm pretty sure. Reduction in lease receivable, interest income. Okay. Suppose it's leasing company. What's this? What? At inception, the fixed asset is removed by lease receivable, 24 each year. It's reduced by the principal portion of the payment. Okay. It's 6, 5. I hate the balance sheet. It's so fucking hard to see. But like the cash flow statement is so much easier to see. It's the principal. Yeah, I'm worried about. Okay. How the fuck? Okay. Asset transformation listed physical asset. Okay. So CFO is computed under IFRS. Cash flow from investing. Okay. Okay. Can I continue this? Deferred accounting benefit. Deferred compensation and disclosure. Pension plan and stock-based reward are example of deferred compensation where employees earn compensation in current period but do not receive cash flow until later. Pension is a form of deferred compensation earned over time period by employee expenses. Wait. Defined contribution plan is a retirement plan in which the firm contributes a sum each period to the employee's retirement account. The firm contribution can be based on any number of factors, including years of services, the employee's age, compensation, profitability, or even percentage of the employee's contribution. The investment decisions are left to the employee, who assumes all of the investment risk. The pension expenses is simply equal to the employee contribution. In a defined benefit plan, the firm promise to make period payment. So there is defined contribution plan and defined benefit plan. The firm promised to make periodic payment to the employee after retirement. Okay. So defined contribution is while you are working. Defined benefit plan is after you're working, after you're not in the company, after like you retire. The firm promised to make periodic payment to the employee after retirement. Yeah, this is okay. This is after retirement, not after they're gone, but this is after retirement. The benefit is usually based on the employee's years of services and the employee's compensation or near retirement. For example, an employee might earn a retirement benefit of 2% of her final salary for each year of services. Consequently, an employee with 20 years of services and final salary of 100,000 would receive 40,000 final salary times 2% times 20 years of services each year upon retirement until death. Because employee future benefit is benefited, the employer assumes the investment risk. A company that offers the defined pension benefit typically funds the plan. Defined pension benefit, yeah. Typically fund the plan by contributing asset to a separate legal entity, usually a trust. The plan assets are managed to generate the income and principal growth necessary to pay pension benefit as they come due. Financial reporting for a defined benefit plan is much more complicated because the employer must estimate the value of the future obligation to its employee. The liability side is pension plan is the financial reporting for a defined benefit plan is much more complicated because the employee must estimate the value of the future obligation. Oh fuck yeah. But basically kind of defined benefit plan, right? Yeah. It's like you calculate their death basically. Yeah. The liability side of the pension plan is present value of the expected payment to the employees for retirement, death, for a defined benefit plan, the net pension asset or net pension liability referred to as a funded status is a key element for analysis. If the fair value of the plan asset is greater than the estimated pension obligation, if the plan is said to be overfunded and sponsored from the okay. Right. Okay. Let's go. If the fair value of the plan asset is greater than the estimated pension obligation, the plan is said to be overfunded and sponsoring for a recorded a net pension asset on its balance sheet. If the fair value of the plan asset is less than estimated pension obligation, the plan is underfunded. Accounting for defined benefit plans under IFRS. This is under IFRS. the change in funded. Okay, this is the defined benefit plan. This is not defined contribution plan. Okay. The change is funded status comprised of three elements: service costs, net interest expense or income, remeasurement. The income statement as expense using okay. The change in funded status comprises three elements: service costs. This represents the present value of the additional benefit employee entitled because they have worked additional year. It is calculated as the net pension asset or liability times the plan discount rate. some of this stuff. Oh my god, there's so many information here. I'm serious. I can take it a little bit. Yep. Lies in where the various pension costs are reported and how are smoothed over time. What the fuck is OCI? Overseas citizen. Other comprehensive income. Okay, so IFRS in income statement. Okay. Oh god. Okay. Give me a second. Okay. I'm so confused, bro. Ah. Hate this so much. Fuck, it's so hard. I don't get why this is added, bro. Okay. Okay. I hate fucking counting. It's so hard. It's not hard. It's like there's so many information. This Okay. Now I'm gonna do some Q&A basically. Gue potong lagi anjing. Okay. Let's start. Retail corporation valuing a retail corporation is evaluating a new lease agreement for a warehouse under USJAP. Which of the following new lease agreement? Okay. Corporate is classified the lease is as a financial lease rather than an operating lease. The lease term covers 50% of the warehouse estimated useful life. The present value of the required lease payment equal to exceed the fair value of the warehouse. The lease has the option to purchase the warehouse at a fair market value at the end of the term of lease. It's between B or C. Other than operating. Oh, this is a financial lease rather than operating lease. So C is, I think, correct. It's between C or B. A logistic firm entered into a 4-year lease for a fleet of delivery vans. Enter into a 4-year lease for a fleet of delivery vans. Assuming the lease is classified as a financial lease rather than an operating lease, how will the firm reported net income if the first year will be affected? Net income will be lower. The earning will be lower. Basically because of interest rate. Interest get higher in the first year, so okay. A construction company lease crane for 3 years. The lease require annual and year payment of 15K. The implicit interest rate is 5%. The present value of the lease payment is inception is A14. Wait, the present value? If this is classified as a financial lease, what is the remaining lease liability at the end of the first year? Lease liability. I need. I'm gonna use this. No, I'm just gonna use this. Make sure it's this is the liability. So you has to be safe. For how long? For 3 years. Okay. 15 divided by I think 5%. Oh shit, my bad. Yeah. It doesn't matter. Okay. So for like 5%. Is it being paid 5%? Yeah, you're going on. Okay, yeah, it's 42.89. 42.89. I'm on the correct path. Yeah. Berapa? No, it's this one, and then minus 10, 15k, 15k karena dari ya bikin 2781 the first year, right? Yeah, so under IFRS, how does the lease classify the cash outflow associated with financial cash outflow? Under IFRS, the entire lease payment is classified as operating payment cash flow. The entire lease payment is financial cash flow. The interest proportion is typically classified as operating cash flow, and while the principal, I think it's C, for C. An equipment manufacturer lease out a custom-built heavy machinery. The present value of the leases out a custom machinery. The present value of the lease payment is strictly exceed the carrying value of the machinery, currently recorded as an inventory on the manufacturer balance sheet. How should a manufacturer lessor classify the initial record on this lease? As a lessor, as a sales type lease, removing the asset, recording the lease to and recognizing gross profit. As an operating lease, as a direct financial lease, removing the asset and recording the lease receivable with no upfront profit. looking at machinery and its balance sheet and recognize depreciation. No, definitely not recognize depreciation. Because I'm guessing this is like a long. This is how should the manufacturer lease or the custom depreciation depends on value of the lease payment as basic. This is financial lease, so the depreciation we did not get that. We did not add that to the balance sheet, to the income statement. Sorry. As a direct financial lease, removing the asset and recording the lease receivable with no upfront profit. As a lease sales type lease, removing the asset, recording the lease receivable and recognizing gross. I don't know about recognizing gross profit. I know, like, I think it's C. Okay, so it's within C or B, right? What song is this again? I forgot. Okay. Regarding pension plan, in which type of plan does the employer bear the primary investment risk? In how is the pension typically it's the fucking it's benefit plan. No, fuck contribution. Yeah, okay, I should say. The technology company amends its defined benefit pension plan, granting retroactive benefit to its employee and creating past service costs. How should these past services What the fuck? I got 3 wrong. Not bad. Really better if I'm being honest. Gue dapet 7 dari 10, so that's not bad, but still not good. What the fuck is this shit, bro? Ew. Okay. I think that's it. Also the jam 6 juga ya. Perfect timing. That's good. Yeah. I'm gonna close the laptop. I think that's it for the stream. Besok bakal nge-stream lagi as usual. Study all day, bro. That's what I have to do. Why are there 2 people watching? Oh, hello. Sorry, I did not see your chat. I was just focusing on the material. Boo, I seriously heard nothing from you. Yeah, it's fine because I was just thinking. I'm actually not studying math. I'm actually studying accounting. Accounting and math is still hard. Both of them is still really hard. So yeah. Okay, I think that's it. That is it for the stream. Tomorrow I'm gonna stream again. I probably will stream at probably I'll stream at it depends on if I play video games or not. This night, if I play video games, I think I'm gonna stream in probably at 10 o'clock, because I'll probably just wake up at like 9. But if I do not play video games for tonight, which I'll probably will play video games, so I'm just gonna like at 7 or 8. Okay, thank you for